A crypto story you won't believe. Embark on a captivating journey through the turbulent yet exhilarating saga of Bitcoin, a digital revolution that shook the foundations of finance and ignited a global movement. From its enigmatic inception amidst the aftermath of a financial crisis to its meteoric rise, contentious debates, and recent transformative events, this narrative unveils the intricate tapestry woven by Bitcoin's evolution. Explore the cycles, controversies, and innovations that define its path. A narrative pulsating with the promise of a decentralized future and the unyielding spirit of human ingenuity. Please give us a thumbs up, hit that subscribe button, and don't forget to activate notifications for the latest updates. Genesis of a vision. The year was 2009. The world was still reeling from the financial crisis of 2008, and trust in traditional institutions was at an all-time low. It was in this climate of uncertainty that a spark ignited in the digital shadows. A mysterious figure, known only as Satoshi Nakamoto, published a white paper titled Bitcoin, a peer-to-peer electronic cash system. This document laid the foundation for a revolutionary new invention, Bitcoin. This seminal document laid the foundation for a groundbreaking concept, a decentralized, peer-to-peer digital currency powered by a revolutionary technology called the blockchain. The idea of eliminating intermediaries, enabling direct transactions between individuals across the globe without the need for banks or financial middlemen. This meant that no single entity had control over its creation or distribution. Instead, it was governed by a complex algorithm and a network of computers around the world. This revolutionary approach offered several advantages. Transparency. Every Bitcoin transaction was recorded on a public ledger called the blockchain, ensuring transparency and accountability. Security. The blockchain was secured by cryptography, making it virtually impossible to tamper with or counterfeit Bitcoin. Censorship resistant. Bitcoin could not be shut down by any government or financial institution. The news of Bitcoin spread quickly. Technologists, libertarians, and anyone disillusioned with the traditional financial system flocked to this new technology. Early adopters, known as Bitcoiners, were captivated by the potential for financial freedom and individual empowerment. They saw Bitcoin as a way to circumvent the control of governments and banks and take charge of their own finances. One of the earliest and most controversial applications of Bitcoin was the Silk Road, an online marketplace for illegal goods and services. While the Silk Road showcased Bitcoin's ability to facilitate transactions beyond the reach of authorities, it also fueled concerns about its potential for misuse. As Bitcoin continues its journey, the world waits to see if Nakamoto's gamble will pay off. Rise of the digital gold. Enterprising individuals intrigued by the promise of Bitcoin's potential began to participate in the process of mining. This was the mechanism by which new Bitcoins were created and transactions were verified and added to the blockchain. Mining, a computationally intensive process, involves solving complex mathematical puzzles, securing the network, and receiving rewards in the form of freshly minted Bitcoins. The early days of Bitcoin mining were akin to prospecting in a digital gold rush. Enthusiasts, equipped with computers and specialized hardware, contributed their processing power to the network in the hopes of unlocking new blocks and earning rewards. The mining community was small but dedicated, driven by a belief in the revolutionary nature of Satoshi's creation. As blocks were mined and the blockchain grew, Bitcoin gradually gained value, albeit initially perceived as virtually worthless. The first recorded transaction involving Bitcoin occurred when Laszlo Hanyecz famously exchanged 10,000 Bitcoins for 2 pizzas, an event now celebrated as Bitcoin Pizza Day, and emblematic of the currency's humble beginnings. Following its explosive emergence, Bitcoin's ascent continued, but its path was anything but smooth. It embarked on a wild roller coaster ride, characterized by dizzying heights and stomach-churning plunges, leaving investors, speculators, and skeptics on the edge of their seats. This volatility became a defining characteristic of Bitcoin, drawing both excitement and caution. With the world watching, Bitcoin's price began a meteoric rise. Fueled by the excitement of early adopters and the potential for immense wealth, it shot up from mere pennies to hundreds of dollars in a matter of months. This initial surge created a frenzy of activity, drawing in new investors eager to ride the wave. Amidst the excitement, the emergence of the Silk Road, a dark web marketplace operating with Bitcoin, cast a long shadow. While it showcased Bitcoin's ability to facilitate anonymous transactions beyond the reach of authorities, it also raised concerns about its potential for illegal activities. This association with illicit markets tarnished Bitcoin's image and fueled skepticism among many. Despite the uncertainties, Bitcoin's allure persisted. Its finite supply, capped at 21 million coins, imbued it with a scarcity akin to gold, earning it the moniker digital gold. This perception of scarcity further fueled its value, attracting not only individual investors but also institutional interest as Bitcoin began to carve its place in the financial landscape. In 2014, disaster struck the Bitcoin world. Mt. Gox, the dominant Bitcoin exchange at the time, suffered a devastating hack, resulting in the loss of 850,000 Bitcoins, worth hundreds of millions of dollars. This event sent shockwaves through the community, causing the price of Bitcoin to plummet and raising serious questions about the security of the technology. Despite the setbacks, the Bitcoin community remained remarkably resilient. As Bitcoin navigated its turbulent waters, a new wave of digital currencies emerged. These alternative coins, or altcoins, offered unique features and functionalities, further diversifying the crypto landscape. While some saw this as a threat to Bitcoin's dominance, others viewed it as a sign of a healthy and growing ecosystem. Beyond the hype. With the dust settling on the initial explosive hype and volatility, Bitcoin's true potential began to emerge. Beyond the speculative frenzy and the allure of quick riches, a deeper understanding of the technology and its underlying principles started to take root. The blockchain, the backbone of Bitcoin, revealed itself to be more than just a transaction ledger. Its robust architecture, characterized by decentralization, transparency, and immutability, offered a secure and efficient framework for recording and tracking information. This revolutionary technology held immense potential to disrupt various industries, including finance, streamlining cross-border payments, reducing fraud, and facilitating microtransactions; supply chain management, enhancing transparency and traceability, ensuring the authenticity of goods, and optimizing logistics processes; governance, promoting transparency and accountability in elections, secure voting systems, and the decentralization of power structures; healthcare, securely storing medical records, facilitating data sharing between healthcare providers, and empowering individuals with control over their health data; copyright and intellectual property, protecting intellectual property rights, ensuring creators receive proper compensation for their work, and eliminating piracy. Bitcoin ATMs emerged in cities worldwide, making it increasingly accessible for individuals to convert fiat currency into Bitcoin and vice versa. This physical manifestation of Bitcoin's presence in everyday life underscored its journey from a purely digital concept to a tangible asset embraced by a global audience. The potential of blockchain technology did not go unnoticed by established tech giants. Companies like IBM, Microsoft, and Amazon began exploring its applications in various sectors, investing heavily in research and development. This mainstream adoption further legitimized the technology and accelerated its development, paving the way for a more integrated future. Beyond the corporate giants, a vibrant and passionate community of developers, entrepreneurs, and enthusiasts fueled continuous innovation within the blockchain ecosystem. Numerous startups emerged, each tackling specific challenges and pushing the boundaries of what this technology could achieve. This decentralized, collaborative approach fostered rapid development and diversification, leading to a plethora of exciting projects and applications. One of the most significant developments within the blockchain space was the rise of decentralized finance, DeFi. DeFi applications allow individuals to borrow, lend, and invest in financial instruments without the need for traditional intermediaries like banks. This democratized access to financial services and opened up new possibilities for financial inclusion, particularly for those underserved by the existing system. Another major innovation was the emergence of non-fungible tokens, NFTs. These unique digital tokens represent ownership of specific digital assets, such as artwork, music, or even virtual land. NFTs introduced new avenues for creators to monetize their work and collectors to own unique digital assets, opening up exciting possibilities in the digital art world and beyond. Despite the progress and excitement surrounding blockchain technology, it still faced significant challenges. Scalability issues, regulatory uncertainty, and concerns about security and energy consumption continued to be major hurdles. Addressing these challenges and fostering collaboration between different stakeholders would be crucial for ensuring the long-term success and widespread adoption of blockchain technology. Governments worldwide debated their approach to Bitcoin, some welcoming its potential, while others approached it with caution, expressing concerns about its use in illicit activities and its potential impact on financial stability. A vision unfolds. As Bitcoin matures, its relationship with traditional financial institutions is evolving. Initially skeptical, some institutions are now recognizing the potential benefits of Bitcoin and blockchain technology. We are starting to see collaborations between established financial players and blockchain startups, suggesting a path towards integration and wider adoption. Governments are responding to the rise of Bitcoin and other cryptocurrencies by exploring the development of their own digital currencies, known as central bank digital currencies, CBDCs. These digital tokens would be issued and controlled by central banks, potentially offering greater stability and oversight compared to decentralized cryptocurrencies. The rhythms of Bitcoin. The 4-year cycle. Since its inception, Bitcoin's price has been observed to follow a seemingly cyclical pattern, marked by periods of explosive growth followed by significant corrections. This peculiar behavior has captivated analysts and investors alike, leading to the widely recognized Bitcoin cycle. This cycle revolves around a fundamental event known as halving. Every 4 years, the reward for mining Bitcoin is cut in half, progressively reducing the rate at which new Bitcoins enter circulation. This decrease in supply, coupled with the ever-growing demand, is believed to be a major driver of Bitcoin's price surges. Historically, Bitcoin has experienced significant price increases leading up to and following halvings. The first halving in 2012 saw the price rise from around $10 to $1,200, a staggering 12,000% increase. The subsequent halvings in 2016 and 2020 followed similar patterns, with Bitcoin reaching new all-time highs of $20,000 and $68,000, respectively. The next halving is expected to occur in May 2024. While the exact impact on price remains uncertain, many analysts predict another significant bull run triggered by this event. Some even speculate that Bitcoin could reach a value of $500,000 or even $1 million by the end of the next cycle. Despite the enthusiasm surrounding the halving, it's crucial to remember that the cryptocurrency market remains highly volatile. External factors like global economic conditions, regulatory changes, and technological innovations can significantly impact Bitcoin's price, making accurate predictions extremely challenging. While the Bitcoin cycle offers valuable insights into the potential for future growth, it shouldn't be viewed as a definitive roadmap. By understanding these recurring patterns, investors can make informed decisions but must always remain aware of the inherent risks associated with any volatile asset class. The cyclical nature of Bitcoin highlights its long-term potential. Even with periods of correction, the overall trend suggests a continuous upward trajectory. As Bitcoin matures and gains wider adoption, its value and impact on the global financial system are expected to grow exponentially. The Bitcoin cycle is not merely about price fluctuations. It represents a deeper rhythm of innovation and progress. Each cycle brings new technologies, applications, and stakeholders into the fold, further solidifying Bitcoin's position as a transformative force in the digital age. While the future of Bitcoin remains unwritten, its history of cyclical growth offers a glimpse of a potentially brighter future. A turbulent landscape. FTX, Binance, and the uncertain future of Bitcoin ETFs. Amidst the ongoing Bitcoin saga, recent events have cast a shadow of uncertainty and intrigue across the cryptocurrency landscape. The spectacular downfall of FTX, the regulatory hurdles faced by Binance, and the continued wait for the approval of Bitcoin ETFs have further fueled the debate surrounding the future of digital assets. Once hailed as the golden boy of crypto, FTX's founder Sam Bankman-Fried witnessed his empire crumble in a matter of weeks. Revelations of dubious business practices and a liquidity crisis led to a domino effect, causing FTX to file for bankruptcy in November 2023. Bankman-Fried's arrest and subsequent criminal charges served as a stark reminder of the potential dangers lurking within the unregulated world of crypto. The world's largest crypto exchange, Binance, also found itself in the regulatory crossfire. Facing investigations and potential sanctions from the U.S. authorities, Binance agreed to pay a hefty fine and admitted to violating anti-money laundering and sanctions laws. This episode highlighted the growing scrutiny that major crypto players are facing and the need for greater regulatory oversight. Despite mounting anticipation, the U.S. Securities and Exchange Commission, SEC, has yet to approve the listing of a Bitcoin ETF. This decision continues to frustrate investors and industry leaders who see it as a crucial step towards mainstream adoption. However, the SEC's stance reflects ongoing concerns about market manipulation and investor protection in the volatile crypto space. These recent events are interconnected and contribute to the overall narrative of the Bitcoin story. They highlight the vulnerabilities of centralized exchanges, the importance of regulation, and the continued desire for investment vehicles that offer exposure to Bitcoin. The FTX saga serves as a cautionary tale, while the ongoing wait for Bitcoin ETFs paints a picture of an industry navigating a complex regulatory landscape. However, the potential for growth and mainstream adoption remains, fueled by increasing institutional interest and the underlying innovation of blockchain technology. As we move forward, it is crucial to approach the crypto space with caution and due diligence. Investors should conduct thorough research, diversify their portfolios, and prioritize security. Regulatory clarity and increased transparency within the industry will be essential for fostering trust and ensuring long-term sustainability. The Bitcoin story is an ongoing saga, filled with twists and turns. While recent events have brought challenges and uncertainties, they also highlight the potential and resilience of this revolutionary technology. As the narrative continues, one thing is certain: the world is watching, and the future of Bitcoin, including the potential approval of ETFs, remains captivatingly unpredictable. Please give us a thumbs up, hit that subscribe button, and don't forget to activate notifications for the latest updates.